and welcome to the TradingPub. And I know you've had a long day, so I hope that we will say something tonight or show you something that will improve your knowledge of these markets or your trading. As many of you know, and that's what I believe, if you can get just one piece of information that helps you improve your trading, it's well worth your time. So we hope we contribute to that as well. Now, I know you've listened to a lot of speakers today and a lot of different programs. We think ours is very unique in that we have the only live chat room that goes from 5 in the afternoon, or evening if you will, till 5 in the morning. We are big believers in the 24-hour market. And our position is, and has been, and it should be for you as well, that if you don't follow the 24-hour market, you're at a huge disadvantage. You're leaving a lot of information on the table, because the U.S. market's roughly 8 hours during the day. Then you have some 17 hours of information that would be very useful to your trading. So I would be very surprised if, again, along with the other speakers, we don't say something tonight that will help you with your trading or your knowledge of these markets to help you navigate them. Now again, my name is Bill Costarides. As you can see, I'm an old timer in the business. I've been around for a while. And the way I really got involved with the Globex is I was looking for a way to hedge portfolios. I was managing several $100 million in portfolios, equities and what have you, and I wanted to find a way to take advantage of opportunities in the global markets. And I was interested in trying to find a way to short the Nikkei, and this goes back to the middle 90s, I think it was. And if you remember, that index was trading in the 40,000 range. There was some opportunities, in my opinion, to short that market. And so I was, even though I was with a big New York firm, we had offices in Asia, it was very difficult to find a way to even buy puts on that market. I had to open an account, you know, with a firm, and even though it was one of our subsidiaries in Japan, and it was very difficult to get quotes, it was very difficult to get fills. I would have never been able to figure out what the trade was doing. Of course, that index dropped from some 40, 42, 43,000. I think you remember, I think it went as low as 7,000. From 44 to 40 to 40,000, and it hovered around 40,000 for a while. And then once it broke that 39,000 area, it was Katie bar the door. And of course, they've been in a period of deflation since then, and it has central bankers around the world all concerned about that. So, you know, that's how I started following these markets and learning to trade in the Globex. I first got involved with that market with my friend Tom Busby, who was just on at DTI, and have been in it probably as long as anyone else you'll meet since its inception. So before I go too far, I'd like to know how many of you have traded in the Globex. That's the market that opens at 5 o'clock and trades till the U.S. opens in the morning. Traded futures there, whether it's currencies or what have you, so I can get kind of an idea of where to take our discussion tonight. All right, so that helps me. Thank you. All right, for those of you who are not familiar with this market, real quick, the CME, working with Reuters, developed what is today the grandfather of electronic trading. Market was developed in the early 90s. And the CME, of course, you know, was trying to service the 24-hour market for currencies in those days. And You know, during the day they had the activity, but at night it was very dull and quiet trading. I'm sure they were losing money. So they developed an electronic trading system, which is the platform and grandfather of electronic trading systems that we all see and use today. And I have to tell you, it was very different back then. Looking back on trying to learn that market, we had to be almost out of our minds. There wasn't anyone to tell us about the Nikkei or how the DAX might affect these markets, how this market actually functions at night. It was a very different animal than trading during the day. We thought we understood trading. We thought we understood the markets, but we found out that this is a very different market, and that's what I hope to share with you tonight. We refer to the Globex as the overnight futures trading, and I will tell you in the early days, and I'm sure there's some folks on here that remember, you can only trade the big S&Ps. There was only 3 or 4 markets you could trade. The fills were sometimes awful. Slippage could be a point to a point and a half. Very, very slow, very thin markets. You know, commissions were $25 a round turn, and you had to have a specific terminal in which to enter those orders, which was called a Globex terminal. Today, you have a laptop, you have a few $1,000s in an account, you can now access these markets. And in my opinion, that's a huge, huge advantage. Now, also, while I'm going through these, if we have some of our folks that are part of our group, some of our other traders, you'll see names like Woody and Harry in the room. They'll be happy to answer your questions. But if for the most part you'll hold your questions, I'll be happy to answer them there towards the end. So most folks think the market starts and opens at 8:30 in the morning. And if you're not familiar with the Globex, the day's trading actually starts at 5 o'clock. So this evening at 5 o'clock started Friday's actual trading days. That's when the platforms reset their margins, reset, send out statements, and that starts the trading days for futures trading. So it's important that you understand these times because they will affect the way the market moves and trades. Now, we just went to these new times not too long ago. In the old days, as I like to call them, and that dates me, the market would close at 3:15. They'd open back up at 3:30 for the Globex session. They'd trade till 8:15, shut down, and then the U.S. market would open. Now it's almost seamless. The S&P still stop trading at 3:15. They reopen at 3:30. They trade to 4:15, and then at 5 o'clock, the new day starts. And all the platforms will reset their computers and their platforms and their margins, and the day is off and running. It's important if you're going to trade in this space, you know these times, of course. Now, my opinion is, and has been, and all the years I've been doing this, and as I said, there's probably just a handful of us who've been around since inception of this market. The Globex market, if you want to learn to trade futures, this is the market where I think you should do it. It's an easier market to trade. It's a slower moving market. It's a better trending market. And one of my favorite pet peeves, you don't have these high frequency trading programs. Now, I'm not going to sit here and tell you there are no computer buy and sell programs. Well, sure, they're automated and some buy programs. But you don't have these HFTs or high frequency trading programs as we've come to know them that operate in this space because there's just not enough volume at night, you know, to service these quant models that these mathematicians have developed. And in fact, the last 2 days, and this is again one of my soapbox speeches, you know, these markets have been tremendously changed, in my opinion, by these high frequency trading programs. And there's been a lot said about one called Virtu that's about to go public. And I'm just going to put these numbers out for you, and you just, when you hear them, I want you to really think about them as I first say them. If you haven't heard this yet, I would be surprised. It's been on CNBC. In fact, Rick Santelli, one of my favorites on that show, he was ranting and raving about them today. It's been on Bloomberg, Zero Hedge, if you look at any of the information. Out of 1,238 days of trading, this firm had one losing trading day. Almost 5 years, 1 day losing in that market. Now, not even the J.P. Morgans or the Goldman Sachs can come even close to that. And you have to ask yourself, how in the world can they achieve those kind of results? You know, it's one of those, if it's too good to be true. So we don't have that in this space, or like we say, at night where we operate. And it's rather refreshing. You have a lot less volatility than you do during the day. In fact, I'll be honest with you now, some nights it can be rather boring. It can be like watching paint dry and requires a bit more patience, but it is a lot less volatile, and in a lot of ways it's much more refreshing than what you see during the day. And I have spent years, and I mean almost from inception, developing indicators that only work at night, and I'll explain more to you how those work. But because there's less volatility at night, you can use tighter stops. We use 2.5 point stops, and you have less risk. Now, you know, if you've traded in the market during the day, or you even observed it, you know, 2.5 points in the daytime is nothing. Even when you have the direction of the market figured out, 2-point stop can get you stopped out, you know, on a regular basis. But at night, we find that 2-point stops can keep us in a trade, 2.5 to 2 points. Now, in addition to the ability to trade this market, of course, and this is again how I got involved with it from the beginning, I was looking for a way to hedge portfolios and to take advantage of events that happened overseas. And that's how I got involved with this market. So it is a great tool. In fact, it's the only tool that once the U.S. markets close during the day, if there's an event like we might have this weekend with Ukraine, like we've been having, crisis in Europe, tsunami in Japan, Lehman Brothers, you know, it's interesting, but a lot of the major events that affect our marketplace that can change the profile of our market usually take place in the Globex, which can be a huge advantage to be able to get ready for that and not have to wait till 8:30 in the morning. But this is the only place where you can go and hedge a portfolio if you choose to do so, and limit your damage, if you will, if we have a market that's going to gap down the next day. For example, last night around 12:30, the Chinese released some very negative economic numbers, and that sent the market on its way down. If you were watching CNBC this morning or Bloomberg, that was where the market actually started its little downward trend that we saw today. Now, they were speculating that some of it was geopolitical due to the Ukraine, or was it economic numbers out of China? Most have been watching copper, which is one of my favorite indicators as a portfolio manager. I used to follow copper on a regular basis because I thought it was a great economic indicator as to where our economy might be going, because it's a major industrial metal that we all know that the world uses in large quantities. And so last night when the news broke on China, which is, in my opinion, a lot of what caused our market to sell off today, it confirmed that there may be a downturn in the global economy, and China may be leading that downturn, and that had the markets a little nervous today. Throw on top of that what's going on in Ukraine, and you can do the math. But it was an opportunity last night to get short then and not have to wait till 8:30 this morning. And there's ample liquidity. There's, you know, I wouldn't have said that a few years ago, but now there is. Yes, this is the only, what we trade only the ES at night, and we don't trade any other markets. My philosophy is learn one market, learn it well. We do follow a lot of other markets, and I'll tell you a little bit about those later in the presentation. But we only trade the E-minis at night. That's the only market we actually trade. So I'm not going to spend a whole lot of time on the math of hedging a portfolio. I'll just put this up real quick so you can get a feel for it. These slides are available at nightscalper.com. If you'll just email us, we'll be happy to send them to you, and you can study them at your leisure. Okay, now I know that you've seen this, you've heard it. Most of the folks in this industry talk about it. You've thought about it. You know, what is the difference between an average trader and a successful one? And I'm just going to tell you how we go about that process. One, you have to have obviously an effective plan and a discipline that you believe in and have confidence in. So we're going to talk a little bit about how we approach that. Okay, so the four components that make up our trading strategy and our management systems, we have key market times, we have proprietary indicators that only work in this space at night or morning, depending on what time frame you're talking about. We have Greekisms, which is another term for signals, if you will. These are broad considerations you should think about and know about, you know, to trade in this space. Being a full-blooded Greek, you know, they gave it the name a Greekism. In fact, Morgan Busby is the one who gave us that name. And then we have the money management system. Now, I don't care who you are or how good a trader you are or how disciplined you are or what your techniques are. This is one thing that I've learned over the years, that if you do not have good money management, you're not going to be successful on a consistent basis. If you're having a sound problem, you might want to log out and log back in, might solve it. Okay, so let's talk about those a little more. The difference between trading is, I like to call it our sandbox or this space at night. You don't have to worry about the DAX during the day. Sure, you can look at it and use it somewhat as an indicator because the S&Ps and the DAX move together for the most part. But you need to know these key market times because at night the U.S. is not the controlling market as it is during the day. For example, during the Asian session, which is that as we define from roughly 5 p.m. till midnight, we have found that the markets that control or have an effect on the S&Ps, and that's all we're interested in. We're only interested in those markets that affect or move the S&Ps. We're watching the Hang Seng and the Nikkei. Now, I know a lot of you are going to ask me, well, what about Australia or South Korea or some of these other markets? But, you know, yes, they're economies, they're great countries, but they're just not affecting the S&Ps. And we're only interested in those markets that will help us find direction on which way the S&Ps might go. And in our experience, and that's why we're here, is to tell you what we have found doing this as long as anybody you'll meet or listen to. It's the Hang Seng and the Nikkei during the Asian session. And after midnight, we get into the European session. And of course, it's the DAX, having been the largest and is the largest economy in Europe, and the FTSE. Some folks will scratch their head and say, why the Hang Seng? Of course, you all remember that it is more of a capitalistic market. It was owned by the British. In fact, I was in China the year before they turned Hong Kong back to the Chinese. And it's just more reflective of what's going on in that part of the world, and is more westernized, so to speak, in terms of how markets go. So those are the markets that we focus on, and at night you need to know these international markets and how they can affect the S&Ps, because you don't have to worry about that during the day. Now, I know a lot of you are asking yourself, well, do I have to be an international economist to figure this stuff out? And the answer is no, you don't. We've made it very simple to trade these markets and understand, as I said when we first started, if you want to learn to trade futures, in my opinion, this is one of the best places to do that. And just think about this, and I'll leave this thought with you while I continue on. A few years ago, you didn't care about China GDP or China PMI, but today you better know. And just like last night when that news came out, in my opinion, the Ukraine was already taking place and already, going along with whatever it's going to do there. But when that Chinese news broke, this market broke. It went from 1874 and started trending down and never looked back. So, think about that. Here's a communist country, part of a capitalistic system. They walk and talk like capitalists, but we can't forget it's still a communist and a closed system. And it does today affect how these markets trade. A few years ago, you didn't think about China. You didn't think about their GDP or their PMI numbers, but today you better know, because if that economy's slowing down, it will affect the world and global economies, especially those of the emerging markets. In fact, they sport a 8 to 9% GDP, which most countries would die for. And if their GDP drops 6 to 5.5%, believe it or not, that could cause a real ripple throughout world economies. All right, so our key overnight trading window is from 5 p.m. till 5 a.m. As I said when we first started, I think I can say that, and we try to check from time to time, I'm not 100% sure, but we probably have the only live chat room where you have professional traders helping you to navigate these markets from 5 in the evening till 5 in the morning. Now, I know you're not going to stay up till 5 in the morning. I know you're not you're not going to stay up and trade at 2 in the morning. You have jobs, you have lives. But most of the people that are in our chat room trade from about 5 till 11, 12 o'clock midnight. I would say that's the majority, and then about 30% of them stay up and trade during the European session. We have a lot of Europeans and Australians that have joined our group. That, of course, that's their daytime, so it works well for them. But we make alarms, noises in the room at night, so you can go about your life. You don't have to sit there and stare at your screen all night. Read a book, go have dinner, spend time with your family. If the markets change, we put on a trade, or there's a change in the stop or change in the trade, or if there's news, we sound an alarm to try to get your attention. We send out emails. With today's technology and smartphones, one way or another, we'll be able to let you know that there's something going on, so you don't have to sit there in the old days and watch that screen all night like we used to have to do. But for the most part, there are a lot of chat rooms, in the world today, but I don't know of anyone that has a live chat room that goes from 5 in the evening till 5 in the morning that works the way ours does. So the Globex trading hours are from 3:30 essentially till 8:30, but we're open from 5 p.m. till 5 a.m. We leave our room open during the day because a lot of our folks like to share their thoughts with each other, trade with each other during the day, even though we're not calling trades at that time. So if I say anything tonight, I want to leave you with this particular thought. If you're ignoring the night market or the Globex, you're missing out on some 17 hours of information and trading in the 24-hour market. Information that can make you a better trader and a better investor, even if you're not going to trade in this market. All right, proprietary indicators. Now, these are indicators that I have spent years developing and tested, that I like to say work about 80% of the time. As many of you know, there's nothing that works 100% of the time. And if someone tells you they have something that works 100% of the time, I would say run. Again, it's too good to be true. But these are tailored to the overnight market. Many of these indicators are not going to help you during the day. And of course, there are pivot times. You have pivot times during the day. They're just different at night. But at night, you need to know when the Nikkei is going to open, when the Hang Seng is going to open, when they go on break, what time the DAX opens, what time the FTSE opens, because these markets will affect the S&Ps as they open and as they close. So these, again, are the international markets that you need to be somewhat familiar with when they open and when they close. We teach you that in a matter of minutes. We have ongoing education on a regular basis as part of our program. And then my favorite indicator, our primary indicator, the dome. Now, the dome is on just about everyone's platform. Everyone has a dome. It works great from 5 p.m. till 5 a.m. in the morning. But if you try to use it past those times, I'm afraid you're going to find it's not as effective. So there's just one example where the dome is a useful tool at night, but doesn't work during the day. So we spent a lot of time on the dome. As I said, it's one of our primary indicators. And then we look at the bonds and the yen and the euro for some sort of correlation as to what the E-minis may do, especially in the environment we're in right now where you have geopolitical events. You'll a lot of times see a flight to quality like we saw today in the bonds. And so, you know, again, everyone was scratching their heads. There was a big day in the bond market, even with the tapering, you know, proceeding on with the Fed. They're thinking, how can the bond market rally like it is when the largest purchaser of bonds is cutting back on their purchases? And, you know, was that a flight to quality because of what's going on in the Ukraine, or was it the bond market anticipating a global slowdown? And my experience has been, when it comes to determining whether it's the bond gurus or the equity gurus, in terms of which ones are right about what's going on in the marketplace, I have found that the bond gurus have the edge. All right, the Greekisms we talked about just a second ago. Those, again, are just broad signals, and there are certain events that you can keep in the back of your mind that can help you navigate this market. And I'm not going to go through all of them. There are some 15 of them. We teach them as part of our program, but I'll just give you an example of what one of those might look like. One of my favorite setups is when you have, and we see this all the time, especially in this market we've been in here of late, where you see bad news. Of course, it's ignored the fundamentals the last couple of 3 or 4, maybe months, but in particular, the last few weeks, fundamentals have meant really nothing to this market. But usually you have like a bad employment number on a Friday. They take the market down, they get everybody short, and they spend the rest of the day bringing it back up and squeezing the shorts. They start triggering stops, and it's just like a feeding frenzy into the close. They close at the top tick of the last hour of trading, and that's usually an opportunity to go short right into the close, and then take advantage of that short when they open in the early trading. Last night we shorted 68.50 on the close. They quickly traded at 67. We had buy orders in at 66.5. We missed it. Unfortunately, that trade, even though we had it figured out, it didn't work out because they went from 67 up to 74 and never looked back. Of course, we got stopped out early. But the trade was working. We just didn't get out quick enough. All right, and here's kind of a quick chart on what that might look like. I'm not going to spend a lot of time on this either because we're only allocated so much time, and I want to try to get to what I think is the more important part. As I said, you can get this information by emailing us at nightscalper.com. We'll be happy to send you these slides, and you can take your time and study them. Monday, following options expiration. Now, this is not 100%. As I said earlier, there's nothing that's 100%, but 80% of the time, the Monday following options expiration, they usually open up. Now, why is that information useful? Well, you have a Friday. Typically, they'll rally them on options expiration Friday into the close. A good bit of the time, when I say good bit of the time, again, 80% of the time, 75. It's not an exact science, but it's often. And you can short into that close if you like. If there's no news over the weekend, it's sort of a risky trade, to be honest with you. But generally, they may open down Sunday night. You can scalp a quick trade. But the benefit of knowing this is that if you're trading Sunday night and you happen to be short and you're doing okay, knowing this information, at some point this market's going to turn around because they're going to open up in the U.S. session. Don't know if they're going to continue up all day. Don't know that much. But generally speaking, they open up. and by having that information while you're trading Sunday night can be very helpful. And this is what I mean by broad indicators or signals. We have our indicators and then we have our signals, and those are not to be confused. And again, this is a chart of what that might look like. Okay, here's where I find a lot of folks that trade either professionally or for a living or on a regular basis. This is where they run into trouble. It's in money management. As I said earlier, you can have the best trading techniques and discipline, but if you don't have money management, it's going to be hard for you to be consistent on a regular basis. And these are some of the mistakes that I have seen over the years. I think we've all done it. I know I've done it. I see it all the time. But, you know, if you don't have a proper money management system, you're just not going to be successful on a consistent basis. So some of the biggest mistakes that I see: over trading. We've all done it. We've all seen it done. Trying to hit home runs. Any of this sinking in? Now this one you don't see too often. Withdrawing profits on a regular basis. Rewarding yourself for your work and the risk that you take. And here's another one. Too many or not enough contracts. So let me tell you how we approach that. The majority of folks that are in our room, and let me just tell you this much now, if you're thinking about joining our group, our crowd, and it's a nice one, I will tell you that. There's a lot of nice folks in our room. But if you're doing it for the adrenaline rush or for the action, you're going to be kind of disappointed, because, you know, up front, sometimes this market can be like watching paint dry or grass grow, as we like to say. And the majority of people that join our group, join our chat room, are doing it for additional income. Once I sold my firm and I retired and I started trading for a living, I found that if I didn't have a money management system, I was not going to be consistent. And so I feel very strongly about this. So what we do is we're trying to, as our name indicates, scalp a couple of points a night. We're not, you know, trying to get into a trade and stay in it for days or multiple hours. We're usually in and out of a trade within a short period of time. We're scalping 1 to 2 points, and if we can make 1 to 2, 3 points a day, then we're going to be successful. And one of the first things we do is, when you join our group, is we say, okay, set a goal. And we're going to talk about a goal of, just say you want to make $2,000 a month. You know, whether it's 2 or 3 or 4, that's your personal business. It just has to be a realistic goal. So let's say you set a goal to make $2,000 a month. Let's assume there's 20 trading days a month. You have to average $100 a day. That's not unrealistic, guys and gals. You know, you can make 1 point trading 2 contracts and you've made your goal. And that's what we ask our folks to do. The hardest part is that once you reach your goal, you know, you stop trading. And I know I'm guilty of it. I can't tell you how many times I reach my goal, you know, at night in the Globex, only to give it back during the day session. Now, you're not going to win every night. You're not going to make money every night. You know it, and I know it. But, you know, if you can average $100 a night, some nights you might make 150, some nights you might, you know, you're going to lose money, of course. We know it, you know it. But the key here is to average $100 a day. You know, we call 1 to 2. Last night we called, I think, 4 trades. Make 1 to 2 points, then you can hit your goal. And when you hit your goal, you should quit. You know, go to bed, go read a book, you know, watch TV, whatever. I'll tell you, it's hard to do. You know it, and I know it. So we try to tell you to treat this as more of a job than it is a fun trading program, although it can be fun. Learn the process and you minimize your risk. It's not difficult to learn this. I'll say it again. If you want to learn to trade futures, this is the best place to do it. Don't overtrade. You reach your goal and you quit. Now, I don't want to compare what we do to the casinos, but everyone knows that the key to the casinos winning is not that the tables are rigged or anything. What they know is that they can keep you there long enough, you're going to give it back if you make it. And it's like that in just about anything. So don't overtrade. You reach your goal. We encourage you to quit. And take a check from your account weekly or monthly. Reward yourself. You know, it's kind of like Pavlov's dog. The more you reward yourself, the more you're apt to continue along with the same behavior. All right, I'm going to take just a minute here, and Woody, one of our moderators and traders in the room, who you've seen typing in the room here and answering your questions, also Michael there, he's going to come on. Woody's his nickname, as I was going to say earlier. This room is very social, and we give each other nicknames. There's Bass Boat, and there's Woody, and I'm the Greek, and then there's Seabiscuit, and the names go on. But he's going to come on and give you a quick tutorial and what our chat room looks like. So I'm going to turn it over to him for just a minute. I'll come back on and close us out, and then I'll take time for questions.
Okay, I just want to get a sound check again. You guys hear me? Okay, great. My volume is low. Let me see if I can fix that. Is that any better? Okay. All right. So, Phil has mentioned that we have a trade room. We do have a projection in there that has a few indicators. Should be known that Bill and his trade calls are a function of his observations of the market and not necessarily using these indicators, but these are also there and available for all of us to use for scalping and for other trades. Let me give you an idea of some of the things that we project. As he mentioned, we do have the live data from the Nikkei, the HSI, the DAX, and the FTSE, and these are from their markets, not from the CME. So, you know, the Nikkei is from the Singapore exchange, the HSI is from the Hong Kong exchange, and the DAX and the Z are from the Eurex exchange. So these are real-time live quotes. I mean, there's a little bit of delay in the projection, but we're talking seconds versus minutes. Okay. We do have a Dome-O-Matic, and that's a automated version of the technique that Bill uses to trade the Dome. I'll give you a little picture of that here in a few minutes. We have something called IB levels. That's initial balance levels, and we use trigger lines. Those are trade by color signals. We use what we have nicknamed the BLOD, which is the blue line of death, and it's a level that works very well on many counter trend trades. And I'm actually working on a system to auto trade that. We have Bollinger Bands, we have a volume, MACD histogram, which basically shows us the momentum of the volume, and that's really good for scalping as well. And we do project a time and sale window. So let me give you a picture of what the projection looks like. And you know, you can't see all the details on this because in order to get all the information, you kind of have to scroll from side to side, and I've squeezed it all into one chart here. So it's a little bit, let's say, hard to see, but I'm gonna put a little bouncing ball on here so that I can show you. So this is the time and sales window. This is the chart we project. These lines right here and these ones here are BLOD lines. There's a green and a red line there that basically follows the trend, and it's green when the market's moving up and it's red when the market's moving down. This down here is the volume MACD. We do have managed trades. I'm not sure they're with Knight Capital. That's a question for somebody else to answer, but we do have managed trades. I'm not sure who the broker is. Over here, this is an interactive broker's projection of some of that data that I spoke of, and this is a Ninja version that I'm trying to transition to, but I don't have all the bugs worked out of that yet, so it's not projecting all of the foreign markets. But this one here is projecting the foreign market data. All right, so that's sort of the overview. Let's talk about the DOM a little bit. Bill likes to use the DOM in a certain way, and it involves adding up 5 levels of the bids and the asks and comparing the two, and basically using that to determine the direction of the price movement. Now, the way that a lot of you get that idea in your head, you might think that the side with the less contracts is going to pull the price to it, but I was surprised to learn that it really is the other way. And the larger number of contracts on the platform draws the price movement to it, and that's the essence of the way that we use the DOM. And our DOM-O-Matic basically is a scripted version which does the same thing that Bill talks about, and he's able to do it by looking at the DOM and just sort of running the math on 5 levels on both sides in his head and getting a good feeling for which side's got more or less. But this is one that does it mathematically, and it also produces a ratio and puts an arrow of which way the trade is going. So that's the DOM-O-Matic. It is a customized Ninja indicator that we have. IB levels. Okay, now there was a person at a different place where we used to work that mentioned this initial balance level concept to me, and he used it in the US market in the daytime. And I, because we trade the nighttime markets, said, well, why couldn't we use this same concept in the nighttime? So I developed this indicator, and basically what it does is it tracks the first hour of the cash open of the Asian, the European, and the US markets, and then it produces some levels which it projects on the chart. Now, everybody has support and resistance levels, and the majority of those are the projection of yesterday's enthusiasm on today's market. They have to do with yesterday's high, low, and close, and there's mathematical formulas that use that to make support and resistance levels on today's market. Well, that's all well and good, but if you looked at last week's Monday and Tuesday, if you looked at last week's Monday and Tuesday, the dramatic difference of down on Monday and up on Tuesday would not have been reflected correctly in the projections that people typically use. But because we use these and they were a function of both Monday's enthusiasm on Monday's charts and Tuesday's enthusiasm on Tuesday's charts, they were very effective. And so these work, and basically after the hour they project levels at 50, 100, and 150% in excess of the high and the low for the first hour. Now today's US market broke way out of 150% to the low side of the market, but you can customize these indications to 100, 200, and 300% instead on these sort of wild excursion days. And it's remarkable how even at that, these even increments of 50% of what traded in the first hour, still, those levels still work. Someone's asking me to comment on the volume. You know, that's Bill's indicator. Why it works, I don't know. I accepted the fact that when he presented it as a way to do it, and I just took the challenge on to come up with a way to technically have it done. I don't like trying to ballpark the numbers. As an engineer, I can't live with making the estimate of 5 levels on both sides, so I just wrote the program to do it, and it does it exactly, and it gives me a ratio, and to me, it fit my needs, and it's a good thing for everybody. It sort of simplifies the process. But you can do it manually with any DOM. It's the bottom line. So this is the overview of the IB levels, and you can see that the Asian market, and basically we run a slower tick on the Asian market than the European market and then the US market. So that's how we get these to not be so tightly wound up. In the Asian market we use 144 tick, in the US market we use a 576 tick, and those are multiples of each other, and that plays a role in some of the way that the indicators work. All right, I'm going to go to the next chart. This is a little more details from the U.S. market on the IB indicators, initial balance indicators. You see the high and the low. It develops a pivot point in the middle of the day's high and low, and you'll then see the market trade to various levels that are projected all day long on these charts. This is sort of my version of the words of what I just discussed with you guys, so we don't really need to go over this again unless anybody's got any questions, but I mean this is the words that go with what I was speaking. Okay, now this is our trigger lines or trade by colors, and this is a really high level tick chart. This is about I think 4,000 or 5,000 ticks. If you were to have traded using this indicator that day, you'd have got long. Once it turned green, you'd have been in the trade until it turned red. You'd have sold then and sold enough, basically reversed the trade. You'd have been reversed down to this point. When it turned green again, you'd go long again, and at the end of the day, you could close. And had you done that with one contract, you'd have had 26 ES points that day. That's just another interesting type of indicator that we project. This is the discussion on trade by colors. Basically, there's a signal line, which is the yellow line, and then there's a, well, actually, there's a baseline, that's the yellow line, and then there's a signal line, and that signal line turns green or red when it's above or below the baseline. And it's a combination of two faster moving averages. And when you use that in conjunction with the volume MACD on our ninja charts, you can scalp pretty well with that. I've been doing it myself for the last 15 or so days, and I don't think I have a losing trade yet. At any rate, let's see. So we're back to, we're through the technical indicators, and we're back here where Bill will take back over again.
All right, Michael, thank you. That's another thing unique about our room is that I think we have, and I can't, make claim to this either, but I think we do. We have the only real live rocket scientist, engineer in our trade room, and he is great with our statistics and helping us develop systems. And he was one of the top engineers at NASA, and retired and decided when they shut the shuttle program down, decided to become a professional trader and joined our group. All right, so in summary, we have our key market times, proprietary indicators, and our Greek isms and money management system. And DR, hanging on to that question for 1 second. We just talked about the DOM, which is one of our leading indicators. And I know that you're going to ask me about performance, so let me just tell you what we do. We call trades, live trades in our room, as I said earlier. We're the only chat room that I know of that is going from 5 o'clock U.S., and all the times that I'm referring to are central. From 5 o'clock Central Time to 5 a.m. in the morning, you have one of us in the room, sometimes all three of us. So at all times you have somebody who understands and knows these markets there to help you navigate. You have the other folks in the room to help you who have been with us for quite a while. And I will say it again, I think we have one of the friendliest and most social rooms in the country, not the trading universe. The calls are moderated by myself, Michael, and Harry. They're tracked diligently in terms of our returns and our systems and statistics. He can quote you almost any statistic you want to know, how many trades we make before Europe opens, how many during the Asian session, how many long, how many shorts. He keeps up with all that, and he tracks those returns for us. And this is a following based on 2 contracts. Now you all also have to assume that you make all of the trades. This is not, well, you trade on Monday night and then go out to dinner on Tuesday, then come back and trade with us on Wednesday. And I'll say it again, I know you're not going to stay up all night and stare at the screen. I know you're not going to stay up till 2 or 3 in the morning. As I said before, the majority of folks trade with us before midnight. They make the majority of their trades before probably 11 o'clock. Some nights they've made and hit their goal before 8 o'clock. It just depends on the market. You know, you can choose the time that works for you to trade, what fits your lifestyle the best. For example, the Australians, it fits their lifestyle to come into our room midnight our time. It fits some, you know, they trade till 9, 10, 11 o'clock. If there are no trades, they just don't trade. All of our charts, this is based on 2 contracts, Tom. And all of our charts are and statistics are available. You just email us at nightscalper.com. So the method is simple. We can help you learn this market regardless of your experience. And I'll say it again, whether you want to trade in this market or you just want to understand it, if you don't at least have a basic understanding of how this market works, you're leaving a lot of information, a lot of technique that can help you make you a better trader and a better investor if you're not even a trader. All right, so here's the deal. 30 days, you'll get the Night Scalper Trade Room, access to our live chat room from 5 p.m. till 5 a.m. is when we're active. We leave the room open during the day because a lot of our folks like to interact with each other. So you get access to the trades in the chat room, the emails, you get the 101 course. First Tuesday of every month, we have 2 hours of education. We try to cram in as much as we can. You get the trade alerts via your email during the week. You get the low risk, high reward trade setups. You have market times, indicators, and the trades that we call. You get all our useful tools and indicators. It's $47 for 30 days. After that, you pay $147 a month. That's all the education, all the files, all the manuals, all the trading. We don't come back to you a month later and say, okay, pay some more money and we'll give you phase 2. That's it. $147 a month. That's all you can eat education and trading and all the information we can possibly provide. And yes, we do education during the course of the trading. A lot of people will ask us questions, and we try to be as helpful as we can, of course. when we have a live chat room. And a lot of our folks in the room, if we're not, we don't have the time to help you right there and then on the spot, we'll usually ask you to send us an email. The folks in the room will help you. There's a lot of experience in that room beyond just the traders, and they like to help. All right, so that's our program, and I hope, as I said, we said at least one thing that will help make you a better trader or a better investor. If we've done that, then we've done our job tonight. So let me take questions now, and then we'll wrap this up for the next speaker. If you purchase, can it be frozen for several months? I'm not sure I understand, Diz, if you'll re-ask that question. Bob, we thank you for that. We try hard. We appreciate it. It's always nice to know. Yeah, Alan, if for whatever reason you want to wait till the end of the month, just contact us. Remind Michael that you attended the TradingPub and that you would like to join at that time, and I'm sure he'll work with you. Diz will be happy to work with that. Like I said, just remind us when you check in that you were attending the TradingPub and we had an offer at that time. Okay, let's see. John, I personally use the OEC platform. We don't really care what platform you use as long as you have an accurate and usable dome, and you need to have real-time quotes on the Nikkei and the Hang Seng. The DAX and the FTSE, there are a lot of firms that will charge extra for those quotes. We provide those for free in our chat room. So it doesn't really matter to us what platform you use. We have people using Thinkorswim. The majority of folks use Ninja and OEC because we support those. You know, like I say, as long as you have a platform and you're happy with the fills and the commissions, that's all you need. We don't really care what platform you use. Let's see. Tom, what we normally do is we'll put on 2 contracts, and let's just say tonight, we were targeting a sell at 50, and we're waiting now because the market looks like it might go a little higher first. But let's just use that as an example because that's where we're trading. But let's just say we sell 2 contracts at 50. When they traded down between 47 and 48, because there's some support there, we would take half the position off. So we're up 2 points at that stage, and then we would bring the stops down to say 49 3/4. That way, no matter what happens, we've made money on the night. And there's always a good chance that that second contract, the runner we call it, we leave that on and see if it'll give us a nice little treat to the downside. But the way we're doing it with the 2 contracts, we stagger, you know, we can stagger stops, we can stagger entries, we can stagger getting out and exits, and that way we reduce risk to a large degree. JM, generally speaking, to trade, and all the platforms are different. Most that I'm familiar with require you have 500 per S&P contract that you want to trade. We recommend you have, you know, at least $5,000 in an account, but you can trade with, you know, 2,000. I just wouldn't recommend it. It just depends on, you know, your platform. Ken, thank you. We hope we gave you some information that will be beneficial. Diz, you're welcome. All right, we're getting close here. Questions going once. If you have any questions after we're done, you've got our website. Email us. We'll be happy to answer them the best way we can. Any information from tonight you want to get, we'll be happy to send to you. Again, in the general sense, this offer expires midnight Friday. Now, like I said, because you were here in the trading pub, if there's some, exceptional reason, like Diz says he's moving, we'll work with you. It's not just open-ended $47 for 30 days. This is a trading pub special. Morgan, we thank you and your crew for all of your help. We hope everyone has a great night moving forward, and we hope we see you folks somewhere on the other side. All right, everybody, good night.
All right, great. Thanks, Bill. Appreciate you and Mike both taking the time to be here. So hope that looks like based on the feedback you guys enjoyed it, but I hope that you guys found that helpful to you. And again, I'll type in that link one more time for you. And Mike actually just typed it in, but here you go. All right, there you go, guys. So again, thanks again for being here. We've got one more speaker coming up. And yeah, like Mike said, Mike, if you can post your email one more time, that would be helpful for people. But we've got one more speaker coming up here. We're actually running a little bit ahead of schedule, and so he'll be up in about 15 minutes. I'll put a quick little timer up there. 15 minutes for that.